August 7th, 2007. America's largest investment banks are on the edge of collapse. Unknown to most Americans, the housing market has gotten out of control, and the world's biggest financial players are caught in a loop of greed and risk, pushing themselves closer and closer to bankruptcy. CNBC's Jim Cramer goes on national television to sound off on the Federal Reserve in an epic rant that signals to America that a period of panic and depression is to come.
You know, when we said,
hey, look, the Dow can rally. We've seen the Dow rally.
No, I know. I'm not even, but I mean, it's just interesting, this bigger...
Well, this is about Bernanke. This is about Bernanke. He has to be on that call. Forget the investors. The investors are going to do... If Bernanke listens, Bernanke needs to open the discount window. That's how bad things are out there. Bernanke needs to focus on this. Alan Greenspan told everyone to take a teaser rate and then raise the rate 17 times. And Bernanke is being an academic. It is no time to be an academic. It is time to get on the Bear Stearns call. Listen, open the darn Fed window. He has no idea how bad it is out there. He has no idea. He has no idea.
Cramer.
I have talked to the heads of almost every single one of these firms in the last 72 hours, and he has no idea what it's like out there. None! And Bill Poole has no idea what it's like out there. My people have been in this game for 25 years, and they are losing their jobs, and these firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
Cramer.
Fast forward 14 years and the alarms are beginning to sound again. For many around the country, owning a home is still an essential part of the American dream. But with recent developments in the market, this dream is being put to the test. Prices are growing quickly out of control, and yet month after month we see no capitulation, only greed and bidding wars that frustrate and push out average middle-class buyers. To understand this and get a grip on what's to come, we turn to one of America's most educated housing experts. He's back. RedFin CEO Glenn Kelman joined Fast Money once again to give us a very important update on the housing market. Kelman has been making appearances on the show throughout 2021, but this time the tune has changed. Earlier in the year, Kelman was extremely bullish on the housing market, suggesting that prices would continue to soar. This came at a time when most people in the comment section were quick to dismiss this thought. In the comments section, many were extremely dismissive of his predictions as it was believed that we were already at the top of a massive bubble. Kelman turned out to be correct, as single-family home prices rose from an average price of $312,000 in January of 2021 to $345,000 according to the latest measure taken back in July. This type of price action has never before been seen. Prices are rising almost exponentially, with the year-over-year measurement reading 16.7%. Even in the depths of the 2008 bubble, the rate of price growth never even came close to what we're witnessing right now. Hypothetically, if this 16.7% were to continue for another 5 years, the average single-family home in America would cost over $746,000. And that's the national average. Hot markets like Phoenix, Austin, and Sacramento would likely see figures much, much higher. The question on everyone's mind right now is, how high can this really go? When will the bubble pop? Well, in the past year, experts have repeated the same facts over and over again. Housing was rock solid, the banking system had changed, and mortgage applications were much tougher to get approved. Gone are the days where you could buy 3 and 4 homes with no proof of income or assets. But many are beginning to read between the lines. How can the American dream of owning a home be sustainable if the average home price soars while incomes lag behind? According to the Federal Reserve, the real median household income in the United States has increased about 10% since 2016, going from about $63,000 a year to $69,000 a year. In that same time, the average home has gotten around 50% more expensive, squeezing the American dream away from the average American. These figures are typically not revealed publicly, but leadership and CEOs like Kelman have this data, which undoubtedly gives them quite the edge when it comes to predicting the future of the housing market. This is why I take time to analyze interviews with Kelman and other big real estate CEOs who have insights nobody in the country has access to. Take a listen to his response in regards to the future of the market.
My point is this: what kind of traffic are you seeing on your site? I mean, you are a leading indicator. If traffic goes up, home buying and home renting demand is going to heat up, because the first thing you do is look at a RedFin and figure out where you might want to look. What are you seeing right now, Glenn?
Well, the market was very hot through April, and then starting in Memorial Day, we saw demand take a step back. People went to graduations, they went on family trips, they just resumed normal life. And now in July and especially August, we are starting to see more sales come through. So it is not necessarily more demand, it's just actually more supply. Sellers have started to sense that there may have been a local peak at least. And so they are listing the home in a hurry. We are getting more listings out there. And as a result, it's just easier to put together deals and we're getting more sales. And so June was a little softer. It almost returned to a normal market. And now July and early part of August, it's heating up again.
So there you have it. The bad news is back. Housing, at least for the foreseeable future, is once again heating up. Glenn Kelman has been on the money this entire year, and I trust him and his data. Despite what many people will say in the comments, there are reasons to be alarmed if you're a home buyer waiting on the dip. The dip is questionable despite these massive increases in price lately. We are still witnessing bizarre behavior with some sellers only allowing tours to cash buyers. But how long can this insanity last? Kelman's next answer is incredibly important. Just take a listen to his wild analysis.
Yeah, and you're seeing things, no contingencies. I will forego an inspection. I will pay all cash. Or I saw a house listed, only all cash offers would even get a tour of the house. I mean, that's the kind of stuff that we're starting to see right now. How long, Glenn, do you think this truly can last?
Well, I think it can last a little while longer yet because the people who are moving from California were paying $2 million for a house there, and they're going to Ohio. So an $800,000 house seems cheap. Home prices in Idaho could triple and seem like a deal. People are using monopoly money from coastal cities to buy properties in the center of the country. And the reason that folks don't want to risk an appraisal, don't want to take borrowed money, is because they know the appraisal is going to come in low relative to all the bids. And so there is no check on reality for the cash buyer. What they bid is what they pay because a lender doesn't have to underwrite it. So that's why the market has been a little bit bonkers. But I do think we are starting to see just a little bit of cooling in prices. About 5% of listings had a price drop over the past few weeks. That is a high for 2021, and it has approached 2019 pre-pandemic levels.
So there he reveals some data that is good news to buyers. It seems that 5% of homes have experienced price drops, signifying a cooling of the market. Now where this is headed to next, nobody knows. To me personally, these recent price hikes all come down to serious inflation caused by the policies of the US government and Federal Reserve. We have had a tsunami of things that have created a unique situation on the ground, building up a house of cards that is now beginning to shake. The Federal Reserve is literally buying up mortgage-backed securities, a financial instrument that was designed to be traded on the open market and not by the state. In fact, the Fed buys up around $40 billion every month with no end in sight. Ask yourself why the government is purchasing mortgage securities while home prices are the highest in history and continue to grow at record pace. That to me screams bizarre. If the Fed is forced to taper or raise rates, you can expect a serious drop in home prices. Thank you guys for watching. As always, please make sure you hit that subscribe button if you enjoyed. Also, if you're thinking about diversifying some of your net worth into crypto, please consider using my affiliate link for BlockFi below. I have been using the service for almost 3 months now and have earned some pretty serious interest on top of some crypto gains.